I'm about to give you the secret sauce to making $1,000 per day trading on Axiom Trade, even if the markets are down. Obviously, you guys are interested in meme coins, and trading meme coins is something that you usually aspire to do, and most of you are mostly interested in the perks of trading meme coins. However, trading meme coins is not always lucrative because it is cyclical, and the most lucrative moments to be trading meme coins is when the price of base coins such as Solana. By the way, you are looking at the price chart of Solana at the moment. So whenever we are having an uptrend, this is when you're going to have the best trading volume and the best trading opportunities when it comes to meme coins. However, on the contrary, when you have a situation when the price of Solana has been gradually going down, right? Opportunities are lesser and lesser, and it's very difficult for you to make money. But you know what? The ball has to go on. The game has to continue going. The markets have to give. We have to figure out a way to make money in a bear market, regardless of how temporal it is. And this is one of the reasons why I am going to be giving you the strategy that you are supposed to use, especially if you have a $1,000 account or even more. So if you happen to have a $1,000 account, or rather, if you happen to have a $1,000 portfolio or even more, it could be a million etc, but the minimum that you need in order for you to make $1,000 per day minimum is going to be $1,000 in your trading account. So what we're going to leverage is obviously the use of leverage trading at a 10x. Of course, if you are going to be trading on a 10x with a 1,000 maximum portfolio, right, you are going to be risking a whole lot. So this is one of the reasons why, even though the minimum amount of money that you're supposed to have in your portfolio is $1,000, right? I do not really recommend trading with the whole $1,000 because this is all you have. You know, the best and the safest way to trade is only trading with about 10% of your portfolio. So if you were in an ideal world, if all things were equal and if you had all the amount of money, or if you had enough amount of money, right, having a $10,000 account would be the best and safest when it comes to risk to reward, when it comes to using the method that I'm teaching you. But hey, we do not live in a perfect world, and most of you do not really have that much disposable amount of money. And even if you had all the amounts of money in the world that you needed, right, you obviously need to learn, and there's obviously a learning curve. And this is one of the reasons why in today's episode we are going to be very conservative, and we are just mostly going to be talking about the strategies for people who are going to be using $1,000 on a 10x. However, you have to understand the implications of using a 10x leverage trade. So usually using a 10x leverage trade means if the price goes up or down by 10%, you either lose or make money. In this particular case, right, with the strategy that I'm going to be giving you, you're going to be having a very high probability of making a whole lot of money, especially if you are trading in the right trend. Okay, so what you need to understand is, first of all, you need to figure out a way to understand what trend the market is in. Therefore, you have to be very good at time frame trading, understanding. You have to be very good at figuring out which are the main time frames that you're supposed to look at and which one you're supposed to concentrate in order for you to figure out whether it is going to be lucrative for you to buy the bottom or whether it's going to be lucrative for you to sell the shorts. And what happens if the markets are ranging? How do you proceed if you are in a ranging market before the market decides to sort of have a continuation of the trend? And what happens if the market is having a pullback? You see, how you trade a pullback and how you trade a trend continuation is very different. So these are definitely all the topic headlines we're going to be discussing in the next coming few minutes. So what I would love you to do is hit the subscribe button and make sure you turn on post notifications, because everything that I talk about is definitely going to make you a better trader. And this is one of the reasons why, if you follow religiously everything that I tell you, you guys are going to be doing very well. Right now I'm trying to give you other ways of sort of surviving when the bear market, or rather when the markets are not really conducive for us to play the altcoin game, or rather the meme coins. Right now meme coins are not really giving, and if you do find an opportunity, obviously you're going to have diminishing returns due to the fact that you are storing your money in Solana while the price of Solana is dropping. For example, today the price of Solana has dropped by about 7.6%, which is close to about 10%. So imagine you were actively trading meme coins, right? You would have lost 10%. Those gains, or rather those losses, were going to impact your portfolio. So this is one of the reasons why, even though you are going to be concentrating on meme coins, it's very lucrative, or it is in your benefit, it is in your highest interest to sort of understand how to do technical analysis with regular altcoins. So for in this particular moment, right, forget everything we discussed, everything we talked about with regards to the filters, etc. Let's just concentrate on technical analysis, pure technical analysis. And by the way, if you guys are not really part of Axiom, you have to be part of this particular amazing trading platform, because it has got everything. It has got meme coins, and it also has perpetuals, it has got wallet trackers, Twitter trackers, you name it. This is one of the reasons why I'm actually beginning to spend more time on Axiom in comparison to Binance, because Binance doesn't really have, the ability for us to trade extremely undervalued meme coins, just like on Pump Fund. So this is one of the reasons why, if you are watching me and you're not really part of Axiom Trade, the link is going to be in the description. Please use my referral code and use the link in the description so that you can be part of this amazing website. Do your due diligence. It's a very legit website. It's backed by Y Combinator, and these guys are absolutely killing the game. I really believe that this particular platform is going to be bigger than Binance in the next coming few years, because they are tapping into something that Binance has neglected for a very long period of time, and they always have everything in one place. And this is one of the reasons why it's easy for me to sort of trade on AxiomPro.com. So yeah, check out the link in the description. Everything is going to be good. You guys are going to make a whole lot of money. So anyhow, getting back to today's episode, right? What you need to first of all figure out and understand is you have to figure out the trend. So how do you figure out the trend, and how do you sort of get to make use of a good trend in order for you to sort of determine where you're supposed to be placing your trades, either on the long side or on the short side? So what you need to understand is there are three types of markets. There's an uptrend, there's a downtrend, and there is a ranging market, where the market basically, just keeps on going back and forth in the same line, and just having a few fluctuations with regards to breaking the upside resistance. Okay, so this is gonna be the resistance right over here, and this is gonna be the support, and this over here is going to be a deviation towards the upside and a deviation towards the downside. If you guys have studied a little bit of Wyckoff distributions, you already understand that this is also referred to as the spring. Okay, it can happen on both sides, on the upside and on the downside. So as a trader, right, you have to be very good at identifying these things: an uptrend and a downtrend. So basically, an uptrend is a market condition where the previous high is always surpassed by the next incoming high. You're always producing higher highs, okay, and you are always producing higher lows. Okay, so this high is higher than the previous one, and the previous one is higher than the other one that was before it. So this is what you usually refer to as an uptrend: higher high and higher lows. Every low is higher than the previous one. Okay, so when it comes to a downtrend, it's the inverse of what we talked about. Usually the higher the previous high is the next high is lower than the previous high. Okay, so it keeps on producing lower highs. Okay, lower highs and lower lows. Okay, so this particular high right over here is lower than this particular high, and this low right over here is lower than this the previous one. Okay, so this is what you call a downtrend. And when it comes to a ranging market, right, basically the price is stuck in one particular threshold or a particular grid, if I can put it that way. The price hasn't determined whether to continue the uptrend or the downtrend. So what you need to do is, when you are having such a market structure, when you are producing higher highs and higher lows, all you have to do is figure out the lowest point and put your entry there, especially on retracements. So you are going to be longing the markets. So when it comes to a downtrend, right, you're supposed to be shorting the markets. Okay, so once you sort of figure out what to do during these particular market structures, right, and then when you're talking about a ranging market, right, this is a ranging market. So what you can do right over here is you can sort of be everywhere. Depending on the prevalent trend, right? Because there are different types of ranges as well. There is a ranging market which is produced by an uptrend, which is produced during an uptrend. Okay, so there is this ranging market that belongs in an uptrend, and there is a ranging market which belongs to a downtrend. Okay, so when it comes to these ranging markets, you have to understand at which point you are trading it. If it's the beginning of a range, right, you can get away with selling the buying the bottom, selling the top, shorting the top, longing the bottom, shorting the top, longing the bottom. However, if you are in an uptrend and the price is ranging, best believe what's going to happen is it's gonna break out. So during a ranging market in an uptrend, the probability of the range breaking up towards the upside is very high. During a downtrend, the ranging market is most likely going to break towards the downside. So this is one of the reasons why you have to figure out when you can get away with trading in a range and just basically longing the lowest point and shorting the highest point, because this is not going to last forever. It's very temporal. Let me give you an example. Now that you have figured out how to play these different four structures of the markets, right? An uptrend, a downtrend, a ranging market during an uptrend, and a ranging market during the downtrend, which you're supposed to sort of expect a downward move because it's obviously happening in a downtrend. And when it comes to a ranging market in an uptrend, you're supposed to expect a breakout towards the end. So what type of trading methodology are you going to use? So before we even talk about the leverage 10x, right, because this is very important, so remember we talked about the fact that you are going to be trading with $1,000. So right now in the comment section below, please let me know how many people have got more than $1,000 in their trading account right now. If you happen to have more than $1,000 in your trading account, right, just say you've got more than $1,000 in your trading account. So what I want you to determine the percentage of the $1,000 in your account. The ideal scenario is 10%. If you have 10% of your trading, your overall portfolio, and if it's close to a $1,000 minimum, that means you've got a total value of about 10,000 US dollars. If you've got a 10,000 US dollars, right, it means you can risk a 10%, because a 10% is going to leave you with $9,000 in case you happen to lose it. Remember, you are a newbie. You do not really have the skills that I have, and you're just trying to figure this out. So this is one of the reasons why I'm not really encouraging people who only have $1,000 to use this method, because if you only have a maximum of $1,000 in your portfolio, right, and you're using $1,000, it means you are risking 100% of your portfolio, which is not wise. I would rather you risk 10% of your portfolio if you have a $10,000, meaning you've got a lot of room for, having a comeback and whatnot, because the worst thing that can ever happen to a trader is losing 100% of your money. So your objective as a trader is you should make sure that you stay in the game. Stay in the game, okay? Stay in the game, and the longer you stay in the game, the better trading opportunities are going to be available. It's all about being in the game long enough to be able to one day get lucky. You know what they say? You can spend 10 years preparing for a moment which is going to give you 1,000x. Okay? So sometimes only one trade is going to give you 1,000x, and you're going to eventually turn into a millionaire, because everybody wants to make $1 million. Okay, so you're going to spend most of your time as a trader preparing for this lucky moment, due to the fact that you have been preparing, you've been studying the markets, and you're ready to be blessed by the trading gods. So most of the time, your objective is going to be staying in the game. Whatever you do, do not lose your portfolio money. Do not get greedy and lose 100% of your portfolio, because if you lose 100%, what happens? You're going to be depressed, you're going to have anxiety, you're just going to sort of lose it. However, if you sustain yourself and you continue being better and better and better at your trades and minimizing your losses, okay? So the other thing that you need to figure out is you need to minimize your losses. Make sure on a daily basis you've got minimum hits. Make sure you do not lose your whole portfolio, and you mostly minimize your losses, because you're not going to have like 100% winning streak. You're going to obviously encounter a lot of losses. So what really matters is you have a particular threshold in your mind saying, okay, I do not want to lose more than 2% of my money. Okay, whatever I'm going to be trading with, I do not want to lose more than 2%. And I should stay in a trade for not more than 1 hour. If I stay in a trade more than 1 hour and I'm losing 2%, I need to sort of get out. Most of the times, if you really follow my rules, your trade is going to be successful after, or rather during 60 minutes. The only time you're going to stay down in a bad trade is obviously less than between 1 hour to 4 hours. If you are still in the minus after 4 hours, it means there's something wrong, and the amount of money that you should lose shouldn't be more than 2%, because if you compound 2%, right, in about 10 days, you're going to end up losing 20%. Okay, this is one of the reasons why it's really, really in your best interest to keep the stop losses minimum. Okay, now that we have talked about risk management, right? Because risk management is very, very fundamental. A lot of people usually end up neglecting the aspect of risk management, and this is one of the reasons why I just want you guys to trade with only 10% of your portfolio. If you have $1,000 in your overall portfolio, just trade with $100. Trade with $100 if you are very diligent, and if you practice proper risk management, and if you compound it, this $1,000 can even turn into $10,000. Okay, so be very patient with yourself. Get the right amount of skills, because the right amount of skills is what really matters. Money doesn't matter. Okay, can you write that in the comment section? Money does not really matter. This doesn't really matter. What really matters is the skills and your ability to understand and comprehend what is happening, because no matter how much money you have, if you do not have the skills, you are going to go back to zero. So this is one of the reasons why work on your skills. Okay, you guys can be part of the Snipers Academy. You already know my price. My price is 2,500 US dollars. You know, if you can't really pay 2,500 US dollars, I understand. It's no big deal, but my overall qualification for you to be part of the Snipers Academy, you have to pay 2,500. Okay, now that we have talked about risk management, we've also talked about the type of trends that you're supposed to look out for and understand and be able to decipher. Now let's talk about the trading methodology that you are supposed to use. So I'm a very big proponent of the VWAP, because the VWAP relies on volume. You know what they usually say, right? Price, or rather volume, precedes price action. You know, usually an increase in volume means something is about to happen, and depending on the circulating supply, you can be able to figure out whether the price is about to go up or whether the price is about to go down. So one of my trusted indicators is the VWAP. Okay, configure that on your trading panel, etc. Do your thing. The other thing that you're supposed to understand and obviously use is obviously the Heikin-Ashi candles. Heikin-Ashi candles. I hope I'm really getting the spelling correct, right? So, you know, just search Heikin-Ashi candles, because they're going to help you add an extra layer to understanding the trend. They are very visually appealing and they're very easy to digest for a lot of people. So VWAP, Heikin-Ashi, and the other indicators that you're supposed to use, or the method that you're supposed to use in conjunction with these, is the triple screen entry method. So the triple screen trading method. Okay, triple screen trading method. Okay, trading method. Once you have these in your trading arsenal, you guys are going to do very well. So if this is just a 30-minute tutorial, right? I can't really go into details. So basically, a triple screen trading method gives you a high time frame. Okay, a high time frame. Okay, a high time frame to trade in, or rather observe the markets. A mid time frame. So I'll just use MF. So high time frame is going to be HF. Okay, and the low time frame, which is LF. Okay, so getting back to this triple trading screen methodology, right? This one is going to help you identify what type of market you are going to be in the uptrend, downtrend, or in a ranging market. This triple screen trading method is also going to help you figure out the entry. Okay, because a lot of you guys do not know when to buy and when to sell. So using the triple screen trading method, you're going to have an entry and an exit as well. Very important things, because if you've got the right entry and if you're able to understand when to sort of go into a position, you're going to make money. If you know when you're going to be exiting, you're going to make money and save money as well. So this is one of the reasons why right now, let's decipher how to use the triple screen trading methodology to understand what type of time frame, or rather what type of market you're supposed to be trading in, and how the market basically is. So imagine we just opened this particular chart, right? So remember, these types of candles might be very different from yours due to the fact that I'm using Heikin-Ashi candles. So if you go on candles, these are the regular candles that you guys are sort of used to, the regular candles. these look pretty messy. They're not really as clean because they are all over the place. Red, green, red, green, what's happening? However, if you use Heiken Ashi candles, you just simply click on your trading trading view. Then you sort of click on candles, then you go to Heiken Ashi. So that's what I'm using, and this is what usually helps me to sort of have a visual perspective of what's happening. Like if you take a look at this, right, there's already a significant difference with regards to the markets, because you can clearly see that this has been a downtrend. So remember when Solana sort of pushed up, or rather put back from 124 to about 176, right before Donald Trump had a meeting or whatever. A lot of people would have thought, okay, this is, it's an uptrend now. But take a look at the Heiken Ashi candles. It's still showing you that it's in a downtrend. Okay, so this is one of the reasons why I love using Heiken Ashi candles. So in order for you to quickly identify what type of market you are going to be trading in, just look at the previous two candles. Okay, by the way, right now I'm actually on the 3-day time frame. So as far as my high time frame candles are concerned, right, remember what we talked about, right? The high time frame that you are supposed to be using, especially if you're going to be trading on a daily basis, is supposed to be 3 days. The mid time frame that you're supposed to be using is supposed to be 4 hours. 4 hours. Okay, then the low time frame that you're supposed to be using is supposed to be 24 minutes. Okay, so what's going to allow you to identify the trend that you are in? The highest time frame, and you're going to be using 2 bars. Okay, 2 bars of the highest time frame. Okay, this is going to determine the trend you're supposed to follow. You're going to be within the trend because you do not want to trade against the trend. So high time frame, 3-day time frame, 2 bars. On a daily basis, you just go to the 3-day time frame, look at the previous 2 bars. 1, 2. This one hasn't closed because we still have about 5 hours. But best believe today's close with regards to the 3-day time frame is going to be bearish as well. So meaning we're supposed to trade with a bias towards the downside. If you use this method using the 2 bar, right, when you were here, or rather when you were here, 1, 2, this was a buying opportunity. You would have gained that particular upside, and you would have made a whole lot of money. If you were using my method, right, you would have figured out that this was the beginning of a downtrend. You would have figured it out on this particular candle because you wait for the trend to continue. If you really want to be conservative, right, you would have started shorting right over here on the 31st of January because these 2 bars right over here are clearly bearish. So that gives you the trend direction. So if you were having this type of knowledge, if you were as skilled as I am, right, you would have obviously made a 50% in profit. And if you were using a 10x leverage, 50%, 50 times 10, that's 500. So if you shorted right over here using this simple formula that I have given you, right, you would have made a 5x by now. From 21st, or rather 31st January, right, you would have multiplied your money by a 5x in a downtrend. So remember, the formula is look at the previous 2 candles, wait for them to close, and that's going to be your trend. So you are going to be trading in that particular trend. So now if you take a look at the mid time frame, right, which is the 4 hours, the mid time frame is going to be your counter trend, and this is where you are going to be preparing your entries and your exits. Okay, so entry and exit right over here. Okay, so when it comes to executing your entries and exits, use the lowest time frame. This is where you get in. This is where you execute. Okay, execute and get in. Execution time frame. Okay, Let me explain. So the counter trend is very important due to the fact that during a downtrend, you want to sort of be able to get in on a pullback before you short the markets. Imagine this is the price of Solana dropping, right? This is Solana going. As a trader, right, you want to pick the optimum entry. This is going to be your likely entry if you want to short the markets. You get my point? Shorting the markets, pick the highest optimum entry that is going to help you minimize your stop loss before the trend continues. You do not want to short here, because if you end up shorting too late, right, this particular move is going to really mess up your anxiety. You're going to be very anxious, and most likely you're going to end up closing the trade prematurely, and then it's going to end up continuing going towards the downside. The trend is going to continue, and this is one of the reasons why a lot of you guys feel like the markets are against you. Whenever you make a trade, right, you always get stopped out. The market reverses, and after a few days or a few hours, the market continues going down, but you have already been stopped out. You probably even lost a lot of money on the stop loss because the stop loss got triggered, but you were right in the trend identification. Please raise up your hand or drop it in the comment section below if this has been you. Whenever you get in an entry, you're always feeling like the markets are specifically against you. Like they know whenever you buy, and they're always trying to sort of do the opposite of whatever you're doing. And then eventually the trade ends up being correct. And if you only had held a little bit longer, you would have made much more money. But you ended up getting stopped out and you lost money, and the markets continued going in the projected direction that you were expecting. Trust me, the reason that happens is because you do not understand how to play the counter trend. The counter trend is going to be your friend, and this is where you're going to be able to like pick the optimum entry, the best entry. Okay, remember this word, optimum entry. An optimum entry is going to allow you not to get stopped out, okay, by your stop loss. Your stop loss is not going to get triggered when you have an optimum entry. So whenever you figure out the trend, okay, wait for the pullback and wait for the optimum entry using the mid time frame. So remember, the 3-day time frame, your optimum entry is either going to be the 8 hours or the 4 hours. Okay, the 4 hours is going to be like a pullback, and you're going to experience such a counter trend. And during this particular counter trend, right, you're supposed to look for an entry on the low time frame, on the 24 minutes. Okay, so once this particular counter trend has come to an exhaustion, look for signs of entry using the 24 minutes, using the VWAP and everything that we have talked about. Ladies and gentlemen, I do not really want to go deep using this, but what I would want you to do is take a look at the triple screen trading method. And with everything that I have given you right now, you are going to be 90% better at trading. To other people who understand what I'm talking about, this really simplifies finding entries and exits. And this is all you need. So if you were having this type of knowledge, right, you would have obviously gone on the 4 hours, because you understand that we are in a downtrend. Go to the 4 hours, wait for the optimum entry, so that whenever the 24-minute comes through, that's when you're going to be placing your short. And this is what happened. Take a look at this. The 4-hour optimum counter trend entry was right over here. Boom. You could have entered. You had another one right over here. You had another one right over here. And you had another last one right over here. This is the 4 hour. So what you could have done is you could have shorted on a 24 minute. If you want to like find an entry, you further go to the 24 minutes. Okay. 24 minutes, and take a look at this. You couldn't have been stopped out because the price was sort of having a low ETC. You couldn't have been stopped out. Not at all. Okay, so if you did that, you would have made quite a lot of money. So right now we are on the 24-minute time frame. So let's take a look at the other time frames that we were sort of pointing at. Let's say, for example, these ones right over here. Okay, so 24-minute exhaustion. Where was your entry? Your entry was right around this particular level. You've got your entry right over here, and you've got another entry right over here. The moment the VWAP sort of the price went below the VWAP, you already know it's your time. It's your time to get in. And this right over here was like a spring. Your deviation, the deviation that we spoke about. Remember what we spoke about? Where is it? This one right over here, deviation, the spring towards the downside, the spring towards the upside. It gives the optimum time to sort of enter, because you can really buy at the bottom or short at the high. This is one of the reasons why you're seeing this deviation. You have another deviation right over here. This one is a very good example of a deviation that you could have used to short the markets. This, ladies and gentlemen, is a masterclass on how you're supposed to figure out what to do and how to execute your trades. Okay, so once you have figured out your optimum entry and exit, just go to your Axiom Perpetuals. Put your trading data right over here. You can configure it whether you want it to have like a leverage of about 10x. You just simply go to adjust your leverage. You put it on a 10x, then you sort of create the update leverage. So whatever you're going to do, you're definitely going to be able to sort of place your trade, and it's going to be worth a 10x. So in order for you to make 100% profit, in order for you to make a 1000 percent profit, right, it needs to sort of move by about 10%. So remember, if you're using 10x leverage, the price has to move in your favor. In order for you to make 100% profit, right, you have to be correct, and the price has to move by 10% because you're using a 3x. You get my point? Okay, so if the price moves in your favor by 10%, it means you make 100%. So if you use my method, you pick the optimum entry for you, and then you use the $1,000, right? All it takes is for the price to move 10% in order for you to make back your money, a whole lot of your money, and you're going to be able to make pretty much $1,000 per day. So obviously you guys are wondering and asking, hey, how possible is it for you to use a 10x and make 100% every day? So if you're using a 10x leverage, meaning the price has to move in your favor by 10%, and you're going to be able to make your 100%, therefore making you $1,000 per day. Okay, because the objective is for you to make $1,000 per day. So in order for you to make $1,000 per day, all you have to do is look for market conditions that are going to favor you by making 10%. So figure out the direction, the market direction, which is going to move by 10%, and do whatever the highest likelihood probability for figuring out that trade is. If it's a downtrend, just short it and expect it to move about 10%. Even if it moves by about 5%, you see, when it comes to cryptocurrency markets, right? Markets on average move 5 to about 8% on a daily basis, regardless of whichever coin you're trading. Even if you're trading Bitcoin, okay, when it comes to Bitcoin, right, you could see a 3 to about 5% on a daily basis. If you are using a 10x, meaning you can make a 50% every day trading Bitcoin alone. So imagine you've got $1,000, right? So meaning if you follow my trading Bible, conservatively speaking, you can make $500 per day. $500 per day multiplied by 31 days. How much is that going to be? You guys are going to be able to make in 10 days you're going to make 5,000. In another 10 days you're going to make 10,000. So if you've got a $1,000 to trade with, if you follow my trading strategy, you can easily make $5,000 per month. Conservatively speaking, all right, you can make $5,000 per month, conservatively speaking. So this is one of the reasons why, if you take a look at the way that I have broken it down, okay, It's very easy for you to pay $2,500 to join my Sniper Academy. Remember, if you want to trade together with me and my team, it costs $2,500. Minimum that you're going to make with the strategy that I have given you for free, you're going to make a minimum. Worst case scenario, if you're lazy and you're not trading on a daily basis, you're going to make 5,000. If you're trading on a daily basis and you're making at least a 50% of your $1,000, right? You're obviously going to end up making maybe 15,000 US dollars per month. So this is one of the reasons why if you join Sniper's Academy, it's a win-win situation for you, and it's going to be very easy for you to recoup the 2,500. Just watch this video over and over, replay it, and you guys already understand that I've given you the blueprint of what to do and how to make money each and every day. I have given you a blueprint on how to make $1,000 per day. So what you need to do right now is sign up for my Sniper Academy. Send me an email. The email is going to be in the description box below. Just say, I want to pay for Sniper Academy. Don't ask me a lot of questions. Just say, CRYPTOHYPE, I want to pay for Sniper Academy. Where should I send the money? Send me the wallet where I'm supposed to send the money. So if we break down this, if you follow my strategy and if you trade with us and you're able to make a conservative $5,000 conservatively, when you're not even paying any attention and not grinding on a daily basis, why would you fail to pay 2,500? Anyhow, it's all up to you. It's not really a forcing matter. We do this on a daily basis, whether trading meme coins or perpetuals, it doesn't really matter. All we do is make these buns. So I'll talk to you a little bit later. You guys have been awesome. In case you've got any other questions for me, please drop them in the comment section below.